Good morning, everyone, and welcome to the Aeris Resources presentation. We'll talk through today about the transformational acquisition we made in the business the last couple of months. It's the acquisition of the Krakow gold mine from Evolution, and really we'll talk through how the new company would look and also the impact that it's made and the opportunity it's bringing to the company to further grow the business through both organic and M&A. The normal disclaimer. The transaction summary: we bought the Krakow mine from Evolution. It includes a very highly prospective tenement package of about 900 square kilometers. The transaction is a $60 million cash up front at completion, which was paid through a $40 million equity raise and a $30 million bridge facility using a facility with PAG. There's a further deferred cash payment of $15 million at the end of year 2, and then there's a 10% value royalty, net value royalty, which will start in year 3, go for 5 years, and capped at $50 million. To put that in context, for us to pay $50 million, we have to make $500 million. So it is a significant return, which we will get if we end up paying that royalty. There's also agreement for 3 months to do a smooth transition. That is all going really well and will be finished by the end of September. Krakow is a high-grade, low-cost mine. It's been going for 15 years and continued to produce consistently around 80,000 ounces. We're forecasting for 2021, 70 to 75,000 ounces at a C1 cash cost of $980 an ounce. We will also invest around $13 million over the first 2 years to increase the reserves resources and increase looking at how do we extend the mine life beyond the current plan. The transaction rationale was all about, we always said we're looking for copper and gold to grow the business. This is a very highly cash flow generative mine. Over the next 2 years, we're looking at $115 million in free cash. And it also allows us to use our tax losses of $256 million as at the end of June 2019. And we see that over the years, and you'll see the slide coming up, Krakow has had a reputation of always replacing. It never had a big reserve, but it always managed to replace as a reserve over the last 15 years. We see this as the opportunity to further grow the business. We will very quickly deleverage the business, and then looking at how do we grow the business through M&A and organic growth. Quickly look at the business. Share price of Friday was 0.53 cents, 5.3 cents, market cap $104 million, enterprise value sitting at 158. One of the things we did since the acquisition, you can see the share price trading up. We raised money at 3 cents, currently trading at 5.3. We also brought Mr. Colin Moorhead on the board, doing 2 new skill sets on the board to ensure that the company is set for future growth. Mr. Moorhead is a geologist by trade. So how does the new Aeris look? We're about 50-50 copper gold. You can see the gold from Krakow. You can see copper. Looking at an EBITDA over the first years of about $282 million. With free cash coming out of the 2 organizations, 2 businesses, about $155 million. We're now based purely on the East Coast with the Brisbane corporate office, and the opportunity now is how do we further consolidate and looking for further opportunities on the East Coast at this point in time. The highlights, look, I'm not going to go into the details of this. We always said we're looking for copper and gold. We're always looking for operating assets. This one ticked all the boxes. It's gold. It was, location is perfect. And it's an underground mine similar to Triton. And we can see a lot of upside opportunity to further grow this mine. You can see the history over the last 10 years, always produced more than 80,000 ounces. This year we're forecasting 75. With already a really good start. You can see it always generated cash, taking the benefit of course, a higher gold price, generated $85 million for Evolution last year, and we're looking at about 68,000 ounces for FY21. This is an important slide. You'll see since the start of this mine, it never really had more than about 3 or 4 years of reserves, but always managed to replace the reserve through drilling. It also historically had about 10 to 25% upgrade on the planned reserves, which has been mined, and we see no reason for that not to continue, but we'll see once we get our head around the reserves and resources. So the plan for us and Cracker for the first 2 years is obviously focusing on a smooth transition of the mine, focusing on getting the returns on the cash flows of $115 million. We also looking at we've hedged 36,000 ounces at $2,536 per ounce for the next 12 months. And of course, the big focus is how do we increase the resource and reserve and the $13 million we've allocated towards exploration. The rest of that slide, you can just see all the different opportunities. There's open pit opportunities, there's underground opportunities, and there's some real greenfield opportunities for exploration going forward. This is just an example of some of the underground extensions which we will target on. Now, each one of those ore bodies just needs drilling. That drilling started over the weekend, and we're quite keen to see what is the returns and the upside on those different opportunities. Those all add up to over 200,000 or 300,000 ounces in targeted ounces, and we'll keep the market up to date as we progress underground drilling. So just a little bit update on 1 July. The site integration and branding is all done. The management team structures has been changed and locked in. We just appointed a new mining and a processing manager, so we changed that structure. They never had a processing manager, but we brought one on board. The IT and other services provided by Evolution will be transitioned by the end of September. Through various sites visits so far, what we've seen, the mill is very good and tidy. Underground mining condition is very good. Very committed and motivated workforce, all looking forward to working with Aeris and creating something substantial moving forward. A great start to July, 8,130 ounces, higher than what we expected. And the drilling at Rosa's Pride looks very exciting, and I'll show you a few of the results on that. And then we're planning to do further drilling with the identification of some depth extensions, which we'll do later in FY21. And as I said earlier, the underground drilling commenced over the weekend. Some of the results you can see there, 48 holes been drilled, 44 intersected gold, some real substantial intersections. If you can look at some of those at 5.4 gram a ton, 5.3 gram a ton. We're planning to put a mineral resource estimate out, which is expected in the second quarter. And then there's further drilling planned and to test those depth extensions later in this financial year. A little about Triton though. Triton has been a producer for us from 2005. It is in a region where you can see a lot of other operating mines and has got over 2,000 square kilometers exploration ground, which we are working on to extend the mine life. Very consistent producer since we got involved with the business from 2013 onwards, producing between 25 and 27,000 tons of copper, 1.8 million ton processing plant. And you can see there, we again forecasting about 24,500 tons of gold, copper for this financial year coming. You can see the tenement package. Not a lot of work has been done in that northern side of the tenement package. It's currently got a 4-year mine plan on it, or a life of mine plan, with a significant amount of upside potential. So both Triton and Morowambi extends at depth. Avoca Tank and Budgie deposits are both unmined deposits, which we can bring into production. And Budgie, we're busy with a decline to get that into production. Then you got Kurrajong, which is an exploration target, 3.4 million tons at around 1.5 to 2% copper, which we'll roll out in the next 12 months. As you can see there, a lot of upside potential to move that mine plan from 4 years to 6 or 7 years by bringing those projects into production. Then you look at the Triton mine, you can just see still open at depth. Budgerigar sitting towards the north, that development is going down. We'll draw that out and bring that into a reserve and then bring that into production within the next 12 months. Morowambi has been the success for us. We started Morowambi thinking we're going to do 1.3% copper. And as we got deeper, we've just seen better and better grades and currently mining Morowambi over 2% copper. And we're planning to do 2 deep holes in the next 3 months to test Morowambi at depth and see how far that extends, and then bring that and continue drilling it out as we mine at depth. So in summary, it's a highly compelling investment opportunity. The fact that we bought Krakow, that has put us in a very different mindset in how we can move the business forward. The free cash from that operation plus the current cash from Triton will very quickly deleverage a business and then put us in a position to look at further growth, both from M&A and organic growth. Thank you very much.